In the first part of this order block series, we went through these 3 beautiful examples that you see right here, and I taught you what is an order block and the rules on how to identify a correct order block. In this first example, we talked about an order block after grabs of liquidity have taken place. Nonetheless, in this second part of this educational series on how to trade order blocks, I am going to take you through how to identify and trade an order block without a grab of liquidity. Of course, if you have not watched the first part already, go ahead and click on this link on the top right of your screen right now and watch the first part, and then come and watch this second part right here. Let's begin with our first example. Let's now go ahead and analyze price action on the 1 hour time frame again. We don't want to get confused. We will remain on the 1 hour time frame. We will not be looking at any other time frames for our higher structure. So on the 1 hour time frame, we will be identifying our structure. Then we will keep scaling down to the 15-minute time frame in order to do our analysis within the potential 1 hour order block. Let's move forward then. As always, with everything in trading, we have to be able to identify breaks of structures. So let's move ahead and note down which structures we have right here. This is the highest point over here, so this is a structure, and we have this point right here as well. Do not get confused. Even if price penetrates this point and comes back to this point, we will not identify this one as an order block. We are still highlighting the lows of this whole movement as potential points of grabs of liquidity. We are just waiting for a break of structure, and we will go through our rules once again, and we will see how we can enter without identifying so many grabs of liquidity, because every occasion is different, and with this tutorial I will take you through every single occasion that you can imagine, so afterwards when you go to trade on your own, you will not be confused when you will encounter any of these situations. Let's now move on and check out for an impulsive break of structure, to be precise. There we have it. We have an impulsive break of structure, which is the point that constitutes our potential order block now on the 1 hour time frame. This point would be this whole movement from this top until this bottom right here. And in part 1 we talked about a very important rule of what constitutes an order block, and this rule was that when we have a retracement, let's say we have a retracement such as this one, we need to check out the lowest point of the retracement, which has to be untested. So in this occasion, this is the lowest part that grabbed liquidity down here, and it is untested because price did not come back to test it. So this one would be a valid order block to trade from. Now, things get a little bit more complicated in this occasion right here, because if we take this retracement from this point, then price retraced, then it went up, and then it grabbed even more liquidity over here. Nonetheless, this point right here, which is the lowest point, okay, this point is the lowest point of this retracement from here, this is the lowest point, was tested by this one. Okay, so this is already tested according to our previous rules. And yes, this is partially right. We will accept it as a lower probability order block, or because of our experience, because we know that this is a peculiar, a unique situation. There was no clear retracement from a high to a low. So the lowest point, let's say, got tested afterwards. We don't have this occasion right here, but look what we did. We broke a microstructure, which was this structure right here. Of course, this movement over here did not break above this area right here, so theoretically this is part of this full retracement. Nonetheless, in those situations, we can, because trading is a game, let's say, of probabilities, we can say indeed that we will accept this one as a lower probability order block, and we will see if we will be able to trade it. Let's now go ahead, delete this line right here and those lines, because we broke structure towards the upside, and the break of structure happened right here. And as always, what we will do, we will go ahead and analyze this whole area, actually this area right here, but we will include this area down here on the 15-minute time frame, so we will see the specifics of this whole movement. Let's go down to the 15-minute time frame. Here things are indeed way more clear. Even though this is part of the same retracement, all of this part, we can see that after this first retracement right here, we broke many structures towards the upside, over here as you see, and then we came back to grab more liquidity. So every time that you see a break of structure on the 1 hour time frame, what I want from you is to scale down to the 15-minute time frame and check out if this whole area fulfills the story as we have taught it here on ChrisFX with this long form tutorial. And of course, this is just the second part. I will go through more parts with many more examples where I will teach you how to become an order block master, how to master order block trading and benefit from it once and for all. And a quick note guys, if you want to accelerate this process, you can go ahead and book a one-on-one call with me where I will take you through the specifics of my trading strategies as I teach them on the ChrisFX Academy, and how to read price action and how to tell yourselves a story around the manipulation that we are expecting after critical news have taken place or after important algorithmic moves have taken place. Let's keep going with our example. On the 15-minute time frame now, we have created new structures, as you see, intermediate structures as I want to call them, with multiple breaks of structures. So now we are analyzing this whole area right here, and we will see how we will tell ourselves the story. Just bear with me. After this final break of structure over here, what do we see? We do not see price taking off instantly, but rather we see it comes back, it retraces in order to grab even more liquidity, to induce even more traders to either go short or to grab the stop losses of these traders, for example, who went long here, then they trailed their stop loss below this low right here because they saw this impulsive movement. So it comes one more time, tell yourselves the story with me, think critically as we go through this example. It is very important that you think before I speak, even pause the video, think for yourselves, tell yourselves the story, and then continue with the video. This is very important educational content, and it is absolutely for free, and it will remain absolutely for free with these long tutorials that I will be making here on ChrisFX. What do we see here? We see that we break below this area as we see it over here. After that, we get a bullish engulfing candlestick, which many traders see as a candlestick from which they will enter with a stop loss right below this area. And remember, we have already told ourselves the story about those people who have trailed their stop losses, and now their stop losses are below this area now, over here. Okay, so we know there is liquidity below this area. And do not get confused, let me say it one more time. You will go and analyze this whole area only after you have seen an impulsive break of structure on the 1 hour time frame. So only when you see this impulsive break of structure that you see right here above this area, only then you will tell yourselves, okay, this might be an area of interest. Let me scale down to the 15-minute time frame as Chris teaches us here for free, and let me tell myself the story inside this beautiful area. After that, I will be able to identify my order block. This is how I want you to think about it. So after the impulsive break of structure has happened here on the 1 hour time frame, scale down to the 15-minute time frame, and then tell yourselves the story. So we continued and we told ourselves the story over here. Until here, I shall say, price came back and grab the liquidity below this area. Then I want you to think, when was the last point of grab of liquidity in this movement as we do this example, of course in retrospect, because there is no other way to teach every single one of you and take you from beginners to experts. We have to go through examples that have played out already. There is no other way to do it unless you book an one-on-one session with me and we go live through the markets and you can watch me trading live. After traders saw this break of structure over here, which now they considered a change of character, I will just note it down as a break of structure, they saw this very impulsive bullish candlestick. Hence, they placed their stop losses below this area and they went long. What did price do? It came back one more time and it grabbed the liquidity below this area. Now, as we are telling ourselves the story right here, why this area over here, of course we see it and we know about it, but why is it important? Because look how we grabbed the liquidity below this area. We grabbed it impulsively, and what did we do? This is one of the rules that we talked about. Price came back very impulsively after it immediately grabbed liquidity, and then it came back very impulsively and closed into our range once again. And with this close into the range, we just changed character at the same time. So again, from the 1 hour time frame, I know that I have this break of structure above this area. What am I doing? I am highlighting this whole area and I'm saying, after I have seen this break of structure on the 1 hour time frame, I'm saying to myself, go down now on the 15-minute time frame and analyze this whole area and tell yourself a story and see if this story holds and if it is a nice story. If it is indeed a nice story, as Chris taught us, then there are higher probabilities of us entering from this order block that we are gonna see right now. So now that we have told ourselves the story until here, there is one last step that I want you to identify that we have talked about it also in part 1. What does constitute now our order block? And pause the video for a couple of seconds if you have watched part 1, and if you haven't, go ahead and watch it. What is now our order block? If you recall, at the beginning from the 1 hour time frame, we were speculating that our full order block is this whole down move before the up move. If I scale down now on the 15-minute time frame, then what did I tell you? That our order block is the down move before the up move, but it is this down move which grabbed liquidity. And in this occasion, you might go ahead and do that and highlight the last down candlestick, this bearish candlestick before the up move. This is a bullish order block regardless of whether it is a bearish or a bullish candlestick, but the correct thing to do is to highlight this whole area as we see it right here. Why is this a significant area? Because before this down move which grabbed liquidity, we had this up move that grabbed liquidity from the upside. So we have this one, this induced traders to get in, they saw this one as a change of character right here. Then we have this point which induced those traders to go long. Then we have the retracement to grab liquidity, and then we bounce towards the upside. So now my order block, which I am going to be using in order to enter trades on a lower time frame, is going to be this whole area over here. And I will scale up to the 1 hour time frame now, and I will extend this area right here. You might have the question, you might say, we already know that, Chris, we know that this one constitutes an order block. And again, I will answer this question without insulting you. I'm just here to teach you. No, you do not. Why? Because you haven't told yourselves the story. In this occasion, what you would be doing if you go ahead and identify every single down candlestick before an up move or every single up candlestick before a down move, what you will be doing, you will be the best retail trader. And when I say the best, you will be the best victim, let's say, for the banks to manipulate. So if you go ahead and identify this as an order block, you are out. If you identify this one as an order block, you will be out. So what I teach you here, yes, it looks apparent, but by scaling down on the 15-minute time frame after you have seen the impulsive break of structure on the 1-hour time frame, you are telling yourselves the story. And when the story holds significance, only then you will say, yes, I will go ahead, for example, and highlight this one as a potentially valid order block, and if I see certain things inside this order block later on when and if price retraces into this area, then I can go ahead and check out for what Chris taught me, and it is up to me to enter or not enter trades as an adult. So let's see now how price reacts when it comes back into this significant order block. Let's move a little bit forward. Here we are within our order block. What did I say in this previous part, in part 1? That now we will scale down on the 5-minute time frame, and if I didn't say it, I'm saying it now. We will scale down on the 5-minute time frame and we will see if we have a retracement and a change of character, and then I will tell you what to do. So let's move forward with this example. There you go, you have an instant reaction right here, but what you don't have a change of character yet. This would be the point of change of character. We know furthermore that the 50% level of these order blocks is very important. Many times price will come back and tap the 50% level of the order block. It is not necessary, of course. What we also know though, I will teach you now how to tell yourselves the story once again when we have retraced into this order block and while you have scaled down to the 5-minute time frame. After this reaction, many people entered here, many traders just entered here because of fear of missing out. So now you know, because you are being taught by Chris FX, you know that there is liquidity below this area. You keep telling yourselves the story. There we go, we grab the liquidity below this area. Now the new point of change of character would be exactly right here. Let's proceed with price action and see what we have. Okay, we have a small retracement. Because of the formation of this structure now, we know that the change of character, the first change of character will happen here. Why is that? Because if I zoom in, you will check out how this price action formed 1, 2, and 3. So we have a new structure being formed. This high is lower than this high right here. Of course, this one right here is a more significant structure, and this one is an even more significant structure, but you have to know that if you wait that long, it is very possible that you will be missing the move. Okay, let's proceed a little bit forward. Here we have seen our first change of character. Of course, the way it is being formed in this occasion, I would love to see this area being broken, but this is enough for me to make me scale down on a lower time frame and check out for a trade there. Let's proceed with price action a little bit, and here we do have another change of character, which is the most significant out of the two, and you will see that I have picked up this example on purpose because you will see what happens right now, right here. Points of interest, potential points of interest in this 5-minute time frame would be this fair value gap over here, which is the gap that is left from this bottom, from this wick right here, as you see it, and from this top of this candlestick right here. This gap would be a potential point of interest, as also the bottom of these candlesticks right here. So if I was to choose where to place my pending order in this occasion, I would go ahead and place it either here. I could place the stop loss below this area, and this might look like a huge stop loss, but it is not actually. Or I would go ahead and do that if I was to place a trade instantly on the 5-minute time frame. Let's see if we get activated into the trade. As you see right here, we are not activated into this trade. Not only we are not activated, we do break this structure. So now those trades down here have become invalid. What does this mean? This means, first of all, that you have to stick with your plan. If your plan says that you will be entering on the 5-minute time frame, then you can go ahead and do what I did right here. Choose from which spot you want to be placing your pending order, but you know that if you do that, then you're having the risk of not being activated into your trade at all. But if you were to place a trade right here after you have seen those changes of character on the 5-minute time frame, the trade could have been placed exactly as I showed you, either on this fair value gap or at the top of this wick as you see it right here, or otherwise at the bottom of these wicks. Anyways, the stop loss would be exactly the same, not as many people say right here. For example, the stop loss will be below the lowest point, and the lowest point is this point right here. So in this occasion we did not get activated into the trade, and this is why I chose this example. But in the third part I will go through the same exact example at the beginning, where I will show you how we would be activated if we would be scaling down to a lower time frame, such as the 1-minute time frame inside this area, and then I will go ahead and proceed with different examples. Again, if you want to accelerate this procedure and if you think that you are struggling with anything, feel free to book a one-on-one call with me, and I will make sure that I will turn you into an expert on anything that has to do with institutional trading and reading price action. For the moment, this is gonna do it for this part. I will see you in the third part, where we will go ahead and check out entries on the 1-minute time frame and of course different examples. Take care and see you in the next one.